Hello students and welcome to today's lesson. So in this lesson guys, we'll be completing the income statement. So I advise you to please pause the video and check the comment section where I've attached a question paper link for this lesson. Okay, so please go through the question paper carefully and make sure to read the additional information and the adjustments before we begin with our lesson. Okay, so let's get started. So we are required guys to complete the statement of comprehensive income for the year ended 28 Feb 2023. So if the year end is 28 Feb 2023, which means our accounting period starts from the 1st of March 2022. Okay, so we are dealing with Ellis Furniture Shop. If you can check that extract that were given there. So Ellis Furniture Shop is located in Ennerdale and is owned by Joanna Ellis. Okay, so the owner of the business. So she sells furniture to the local community on credit and also for cash. So a profit markup of 50% is added to the cost price. Okay, so you need to note that as well. So the financial year of Ellis Furniture Shop ends on 28 February 2023. So already highlighted that as well. So the accountant Ntando Sitole could not complete the financial statements as he fell sick and was booked off for 3 months, right? So Johanna has requested your assistance with the preparation of financial statements. So the bookkeeper has compiled some information which appears below. Okay, so the bookkeeper has assisted us with pre-adjustment trial balance of Ellis Furniture Shop for the year ended 28 February 2023. So guys, if it is pre-adjustment trial balance, it means now that trial balance was prepared before taking into account the additional information and the adjustments. Okay, so it means now all those values that you see there, starting with capital, fixed deposit, trading stock, bank, the loan, the nominal account section where you have expenses and income, all those values that you have there on that trial balance, they were taken into account before factoring. Sorry, they were prepared, they were calculated before factoring the additional information and the adjustments. So information A, we have the pre-adjustment trial balance. So let us get started with our income statement. Okay, so the income statement, guys, of a trading company, as you know, it starts with sales. Okay, so it starts with sales. So as you can see there from the answer booklet, we are already given that figure of 1,280,000. So that figure is actually from the pre-adjustment trial balance there, as you can see. And then guys, if we are saying when we are preparing the income statement of a trading company, so basically a trading company is a company that is buying goods and selling goods. So we start with sales. So it means now we need to go to additional information number B, section B of our additional information. So in section B, we are given additional information and the adjustments as well. So we need to ask yourself, do we have any transaction that will affect sales? Okay, so on my side, I did check. So transaction number 1 will affect our sales, as we are told that no entry was made for a credit note issued to debtor K Nido for stock returned for 4,500. Okay, so we sold items on credit to K Nido, and then which means when we sold those items, our sales increased, even though it was credit sales. But now Nido is returning items to us, which means our sales they need to decrease by 4,500. Okay, our sales they are decreasing by 4,500. So it means now we need to check if we have anything that will affect our sales. Okay, so our sales as well, guys, we need to minus the debtors allowance, right? So the debtors allowance is given that figure of 12,400 from where the pre-adjustment trial balance, that 12,400. Okay, so you need to press your calculator and then we'll get the value of 1,263,100. 100. Okay, so what about now with cost of sales? So with cost of sales, we have a figure of 640,000 from the pre-adjustment trial balance. So obviously, guys, if we have returns, they will also affect our our cost of sales. So we need to go and multiply that 4,500 by 100 divided by what? Divided by 150, right? So if the markup is 60%, we're going to multiply by 100 divided by 160 to get the cost of sales. If it was 40%, we're going to multiply by 100 divided by 140. So it's the selling price times 100 divided by 100 plus the markup percentage. So we'll get there a figure of 3,000. So it means as well our cost of sales, they are decreasing by 3,000. Need to write that figure there. It's 3,000. Okay, so returns, they affect trading inventory, they affect cost of sales, they affect sales as well. So we need to minus our cost of sales of 637,000. 637,000. So it means now on your side, you can just press your calculator and calculate the gross profit. So the gross profit, sales minus cost of sales, and then we'll get um, a gross profit of 626,100, right? So it's the 1,263,100 minus 637,000, and then we get the gross profit of 626,100. Okay, so we move to our next item there, the other operating income. So with other operating income, as you can see, guys, we're already given the discount received. And then I did check the transactions as well. We do not have anything that will affect the discount received. So it means now we need to go and take that figure of 3,100 from the pre-adjustment trial balance. Okay, so do we have any other income? So as you can see there, we also have rent income. But now with rent income, guys, we have a transaction that affects our rent income. Okay, so since we have a transaction that will affect rent income, so it means now we need to go and take that figure from the pre-adjustment trial balance of 179,550. Okay, so if you can look at transaction number 9, so in transaction number 9, guys, we are told that a spare office has been rented out to a tenant since 1st of March 2022. The first day of our accounting period, we decided to rent out a spare office. So the tenant paid March 2022 rent in advance during February 2023. So the tenant, instead of paying for 12 months, paid for one more month extra, which means we received that money in advance, right? It does not belong to our accounting period. So note, um, the rent was increased by 1,350 per month from the 1st of Jan 2023. So it means now on our side, we need to calculate the March rent, but the March rent also includes an increase of 1,350. So our accounting period starts from when? First, um, 1st March 03 2022 up until when? 28 Feb 02 2023, right? So we're also told that the rent increased from when? 1st of Jan 01, is it 1st Jan? Yes, 1st Jan 01 01 2023. And then we are told that our tenant paid one more month extra, right? When? March. So 30 March 03 2023. 2023. So we need to calculate the the March rent, but the March rent involves an increase of how much? 1,350. So we need to calculate our rent, guys, before the increase. So do we have our rent before the increase? So we don't have. But from the 1st of March, April, May, June, July, August, September, December, right? So it's March, April, May, June, July, August, September, October, November, December. For 10 months, we don't have that rent. We're not given. So we can just say it will be our 10x plus. We have the rent after the increase, meaning from the 1st of Jan 2023 up until the um, 30th of March 2023. We don't have as well. That will be 3 months, right? So it's Jan, Feb, March. So we don't have the rent. It's 3x. But what we know about this second x, guys, is that our rent increased by 1,350. So that x, it also includes the increase of 1,350, which is equals to the amount of rent that we have from our trial balance of 179,550. Okay, so we can just solve for x now. So we have 10x, then we'll multiply 3 times x, 3 will multiply as well the 1,340. So we'll have 3x plus 3 times 1,350, then you'll get 4,050, which is equals to 179,550. Okay, so we can just solve for x there. 10x plus 3x, you'll get 13x is equals to 179,550. We take the positive 4,500 from the left hand side to the right hand side. Therefore, the sign will change into a negative 4,050. Okay, so as 13x is equals to the 179,550 minus 4,050, we'll get 175, right? 175 and 500. So we divide now by 13 both sides. We divide by 13. So x will cancel x. So 13 will cancel 13. Then we will be left with x is equals to the 175,500 divided by 13. So we'll get an amount of 13,500. Okay, so that 13,500 is the rent before the increase. So we need to add the monthly rent of 13,500 before increase. So we add 1,350. So after adding 1,350, let's add there 1,350. Then the answer there it will be 14,850. So this is the monthly rent now after the increase, the 14,850. Remember, our tenant paid one more month in advance. So that money does not belong to us. So we need to minus the 14,850. So this is income received in advance. So income received in advance is actually a liability, right? A short-term liability to us. So it is recorded uh, on the statement of financial position under current liabilities. Okay, so I hope you understand that as well. Okay, so let's calculate now our rent for 28 February 2023. So you can just minus there and then you get a figure of 164,000. So it's 164,700. Okay, so do we have any other income? Yes, we have. So if you can look at transaction number 8. So on transaction number 8, that guys were told that the bank statement received on 28 Feb 2023 reflected the following. So you have bank charges. Charges will be recorded under expenses, and then we also have P Smith there. So P Smith, a debtor whose account was previously written off as irrecoverable, deposited 1,200 into the business bank account. Okay, so we have a bad debt there that has recovered their account of 1,200. Okay, so as you can see on the answer booklet that we're given, we no longer have a space for other income, which means those are the only three figures that we have. Okay, so you add those three figures, then we should get a total of 169,000. 169,000. So we need to calculate now the gross operating income. So gross operating income is equals to the gross profit. So it's 626,100 plus 169,000 plus 169,000, and then you should get a gross operating income of 795,000. Okay, so our gross operating income 795,100. So it means now we need to calculate what the operating expenses. So as you can see, we already given water and electricity there from our answer booklet of 35,400. And then what else do we have? We have advertising. So I did check the additional information. There's no transaction that will affect advertising. So it means now we need to go and um, take that 30,000 from the pre-adjustment trial balance. Okay, so do we have any other expenses from the trial balance? Yes, we also have bad debts. Bad debts, bad debts, right? And then as well, we also have a transaction, guys, that will affect bad debt. So it means we need to take that 11,300 from the trial balance. So if you can look at transaction number 3. So in transaction number 3, we're told that a debtor T Kwabane who owes 950 must be written off as irrecoverable. So we need to increase our bad debts by 950. We're not. We can see that most probably Mkwabane will not cycle their accounts. Therefore, we need to recognize bad debts. So we need to press your calculator there, and then you should get 12,250. 12,250. And then we also have salaries. Salaries, we have a transaction that will affect salaries. It means now we need to take the 184,000 from the trial balance. So looking at transaction number 11. Transaction number 11. We have there on transaction number 11, an employee has been omitted from the salaries journal of February 2023. The details are as follows. So you're not given the gross salary, we have deductions, you have contributions, and then we have this net salary, which is the salary after deductions. And then we're also told there additionally that employers' contributions are recorded as salaries and wages. So what we need to do first is to calculate our gross salary, right? So to calculate the gross salary there, guys, since we have the net salary, right? So gross salary is equals to, it will be the 13,000 plus the deductions of how much? 6,000. And then we'll get the gross salary of 19,000. Then we add that 19,000 as well. What else are we adding? We're going to add the employer's contribution, as we are told that employer's contributions are recorded as salaries and wages as well. So we'll add the contributions of how much? 3,000. 3,000. So you should get a figure of 206,000. Okay. So do we have any other expenses? Yes, we have telephone. So telephone as well. We have a transaction that will affect telephone. So it means now we need to go and write and take that 17,500 from the trial balance. Okay. So if you can look at transaction number 4, we're told that the the telephone account for February 2023 has been received but not yet paid. We received an account, but we haven't paid an amount of 2,450. So we need to increase our telephone bill by 2,450. So it means now the 17,500 plus 2,450, and then our telephone bill will amount to 19,950. And then do we have any other expenses? We also have stationery, guys. Uh, so we also have a transaction that will affect stationery. So in our books, we have a stationery of how much? 23,200. 23,200. But on transaction number 2, we're told that on the last day of the financial year, a physical stock taking revealed the following: trading stock and also the stationery as well. So it means now we need to go and minus our stationery on hand of 1,050, right? So the 23,200 from the trial balance minus our stationery on hand, and then we should get an amount of 22,150. So it means as well, guys, we need to calculate to check the trading stock, right? So the trading stock, we need to determine if we have a trading stock deficit or a surplus. So we're supposed to do this when we're calculating actually other operating income. Okay. So as you can see on our trial balance for trading stock, we have 1,000, 123,000, 400. 400. Okay. Remember, transaction number 1 also affects our trading stock. So we need to increase our trading stock by 300. Sorry, 3,000. So if you can calculate there, the 123,000, 123,400 plus 3,000. So the value of our trading stock now is 126. We have 126,400. But however, in our books, we, after doing a physical stock taking, we have a physical stock of 118,250. So as you can see, on the physical stock taking is revealing that we have less stock. So which means now we have a trading stock deficit. But if it was revealing that after our physical stock taking we have more stock, which means now we're going to have a trading stock surplus, right? So it means now we need to minus there that 18,000, 18,000, 18,250. So it means now on our side we can just write here trading stock, deficit. Let's just write D. Okay, so it is the one, you can write the whole thing here, 123,400 plus 3,000 minus 18,108. So let me try to get enough space. Okay, so 123,400 plus 3,000 minus 18,000, so 118,250. Then we'll have a trading stock deficit of 8,150. 150. So it's 8,150. Okay, so after stationery, and then we also have insurance, guys. So insurance, we have a transaction that will affect insurance. So we need to write that 44,000 from the trial balance. So looking at transaction number 6. So transaction number 6, we're told that an annual insurance premium of 10,000 was paid on 1st October 2022. So we paid an annual insurance from the 1st of October 2022 up until when? So if it's from 1st of October 2022 is until 30 September 2023. So which means now we need to calculate the income that we paid in advance, the prepaid expense, right? The prepaid expense. So we need to firstly calculate our monthly insurance. So it's 10,800 divided by 12, right? So 10,800 divided by 12, and then should get a figure of 900. So this is the monthly insurance. So we need to calculate the months that belong to our accounting period, right? Starting from the 1st of October, November, December, January, Feb, March, right? So it's October, November, December, January, Feb, right? So which means now it's only 5 months that belongs to our accounting period, which means the other remaining 7 months, they do not belong to our accounting period. So we'll multiply by 7 there, and then we'll get 6,300. So we need to go and minus this prepaid expense of 6,300. 6,300. Okay, so after pressing your calculator on my side, I'm getting 37,700. Okay, so we also have other expenses there, guys. Okay, so we have the discount allowed, right? In our books we have 3,800, so it's 3,800. Okay, so if you can look at transaction number 5, we're told that a debtor settled the account after 30 days. So a discount of 300 was given in error, right? So this must be corrected, which means that 3,800 also includes the 3,000 that was recorded in error. So we need to minus, sorry, the 300. Okay, so after minusing the 300, guys, on my side I'm getting 3,500. 3,500. Okay, so let's move to our next item, the bank charges. Bank charges. So on our books we have 2,300 on the trial balance, but on transaction number 8 we're told that the bank statement is reflecting that we have additional bank charges of 400. So it means now we need to increase our bank charges by 400. Okay, so after adding there on my side I'm getting 2,700. Okay, and then what else do we have? We have depreciation on transaction number 10. So on transaction number 10, guys, they are telling us that we need to provide for depreciation of 40,500 for the year. So we don't need to calculate anything. We're already given the depreciation. Depreciation of 40,500. 40,500. So please add all those figures and get the operating expenses. So need to go and minus the operating expenses there by opening a bracket. So total operating expenses, they amount to 418,300. So it means now we need to calculate the operating profit. So how to calculate operating profit is the gross operating income minus operating expenses. So it's 795,100 minus 418,300, right? And then we'll get an operating profit of 376,000. So it's 376,800. Okay, so it means now we need to calculate the interest income. Okay, so starting with the interest income, guys, on our nominal account section on the trial balance, we have interest on fixed deposit of 4,200. So from the trial balance, that 4,200. And then as well, we need to check the transaction number 8. We're told that the bank statement received on 28 February 2023 reflected the following. The last point there, interest on current account of how much? 125. Okay, so do we have any transaction that affects interest income? Okay, so yes, we have transaction number 7. So transaction number 7 speaks about the fixed deposit that was invested on 1st of March at Save Bank. So the interest received for 9 months only. Provide for the outstanding interest. So we only received interest for how many months? 9, right? So it means now we need to go and take our fixed deposit on our trial balance, which is 80,000 times 7%, that is per annum, times as well how many months, since we only received 9 interest for 9 months, times the outstanding months of how many months, times 3 over 12, right? And then you get 1,400. So we need to recognize that 1,400 as well. So need to calculate now the total interest income of how much is 5,725. Okay, so we need to calculate now the profit. So the profit before interest expense. So it will be the operating profit that we have here. Operating profit plus the interest income, then we get the profit before interest expense of 382,525. Okay, so we need to calculate now the interest expenses already given, guys, which means there is no transaction that will affect interest expense if we are given on the answer booklet the 23,100. Okay, so let's calculate the net profit for the year. So it will be the profit before interest expense minus interest expense, and then you should get on my side I'm getting 359,425, right? Is the 382, so it's 382,525 minus 23,100, and then our interest, sorry, our profit for the year is 359,425. So I hope you are getting the same figure as well. Okay, so thanks guys for watching this video, and make sure that you follow my channel and subscribe for more videos. Okay, so I will keep on uploading more videos. So thank you guys. And as well, I also provide extra classes, right, for only 50 rands a month. Okay, so you only pay 50 rands a month, and then you get extra classes. Okay, thank you. I'll see you on the next one.